All right, let's dive into Swedbank's third quarter results for 2025. This was a really important moment for the Nordic banking giant, and honestly, the market's reaction, or lack thereof, tells a pretty fascinating story.
And yeah, that's really the big question we're going to unpack today. Swedbank came out with a set of numbers that, on the surface, looked fantastic, super clean, super strong. And yet, the stock pretty much went nowhere. What's up with that? Okay, so let's just lay it out. On one side, you've got these killer results. A 16% return on equity, earnings per share of over 7.5 kroner. I mean, beautiful stuff. But then you look at the other side, and the stock price ended the day down 0.25%, on heavy trading volume too. So clearly, the market saw something the headlines missed. Let's find out what.
To figure that out, we've got to pop the hood and get into the engine room. Let's really dissect the key numbers that made this look like such a clean quarter.
First thing you see is that return on equity, 16%. That is a seriously strong profitability metric, and you better believe management was pointing to this, saying, see, we're delivering right on our goal of being over 15%.
And then there's this number, their cost-to-income ratio, 0.35, or just 35%. For a bank, that is absolutely elite cost control. It just shows you how disciplined this team is. They're not messing around.
And would you look at their balance sheet? A CET1 capital ratio of 19.7%. That is a massive buffer. We're talking almost 5 percentage points more than what regulators even require. In banking, that's what you call a fortress.
So let's see how all those pieces fit together on the income statement. Total income, up. Expenses, down. Nice. They even had net credit reversals, which means they actually got money back that they'd previously set aside for bad loans. But wait a second. Look closely at that very top line, net interest income. It was down almost a full percent from the last quarter. And that is our first big clue. So with that little wrinkle in the background, how is management trying to steer the ship? Let's talk about their game plan, how they're playing both defense and offense in this environment. You know, it all comes back to their Swedbank 1527 plan, and the pillars are pretty straightforward. They want to strengthen their customer relationships, which they hope will help them grow their business volumes, all while just relentlessly getting more efficient. That's the formula they're counting on to keep that ROE above 15%. Now, a huge part of their strategy is just de-risking the story for investors. They got their credit rating upgraded by S&P. A long drawn-out SEC investigation in the US was finally closed with no penalties. This is all about management cleaning house and getting rid of that old baggage that's been weighing on the stock. And they're not just playing defense, they are making some smart moves on offense. They're buying the rest of Entercard to build a dominant cards business in the Nordics. They're taking a piece of SB1 Markets to bulk up their investment banking side. And they're pouring money into AI to make their advisors better and faster. These are real, concrete steps to build new income streams for the future. So everything seems pretty solid, right? The numbers are clean, the strategy is clear, they're executing. But then came the Q&A session with the analysts, and that's where all the market's hidden anxiety finally came bubbling to the surface. So what was it? What was the one topic that analysts just kept hammering on question after question? It all boils down to this one phrase, the NII glide path. It sounds technical, but it's actually a pretty simple idea. It's the market's fear that as central banks lower interest rates, Swedbank's main profit engine, that net interest income line, only has one way to go, down. And suddenly, every piece of good news in the report was completely overshadowed by this one big worry about the future. And you know, management's answers didn't exactly calm anyone down. When they got pushed on just how brutal the competition is in the Swedish mortgage market, the CEO was pretty blunt. He basically said, yeah, it's tough, and it's not getting any easier. Now, if you're an investor already worried about future income, that kind of uncertainty is the last thing you want to hear. Okay, let's pull all of this together. It's time for our take on the quarter, the stock, and what we're going to be watching for heading into the next earnings call. The whole debate here is actually pretty clear. The bull case is really compelling, right? You've got that fortress balance sheet, world-class cost control, and all these new ways to grow fee income. But the bear case is just as simple and powerful. That relentless pressure on NII from lower rates, the crazy competition in mortgages, and maybe a little bit of uncertainty in their Baltic markets. So where do we land? For us, our rating is market perform. Look, there is no question this bank is executing incredibly well. But those headwinds on net interest income, They are real, and they are significant. We think the stock will probably just track the broader market from here, but we just don't see a clear reason for it to really outperform right now.
But now for our favorite part, we don't just do analysis, we like to think about action. So how would we actually trade this view? Here's the idea from our desk.
We're proposing a pair trade. You go long Swedbank, and at the same time, you short a less diversified, pure-play Nordic mortgage lender. Now, here's the logic. That NII compression is going to hurt the entire sector. But Swedbank has a buffer, right? It has that growing fee income from asset management, from cards, from its corporate business. A pure mortgage lender doesn't have that defense. They are way more exposed to that margin squeeze, which we think makes this a really compelling relative value trade.
And as always, this is not financial advice.